Bitcoin's vastly outperformed gold, and I think it will continue. And so when people say, is the bull market over? Jack, we've reached the top. I don't measure Bitcoin dollars as much as I do Bitcoin gold. We're still below all-time highs. We haven't even gotten started. We have not even gotten started. The party is just about to begin. Policy is to debase the dollar, inflate your way out, default through inflation. Bitcoin is the only ticket we are all sold. It's the only exit door we all can walk out of. And I personally think, I'm getting very excited, it's really heating up. The temperature is getting warm. I think Bitcoin is going to go nuts.
The market's calm has people asking the wrong question. Is the bull run over? But that depends on what lens you're using. If you're only tracking Bitcoin in dollars, you're missing half the picture. Zooming out and measuring Bitcoin's performance against gold tells a different story entirely. What looks like sideways movement in fiat terms is actually quiet dominance in motion. The real move isn't behind us. It might not have even started. Popular market analyst Jack Mallers takes a different perspective. He isn't watching dollar candles, he's watching purchasing power. And by that measure, Bitcoin still hasn't reached new highs. He sees the dollar debasement playbook continuing as expected, with inflation being used as a silent default strategy. In that context, Bitcoin becomes more than an asset. It becomes the only credible exit door. Not hype, not hope, just math, policy, and time. This isn't peak cycle behavior, it's build-up energy. Bitcoin is maintaining strong structure, outperforming gold, and positioned perfectly in a macro environment that plays to its design. As volatility compresses and funding tilts negative, pressure builds. It's quiet now, but that's how these things always begin. According to Mallers, the real party isn't winding down, it's just getting started. Let's bring you more clips from Jack Mallers' sharp market analysis to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
The big thing that I want you guys to understand is where there's two economies, okay? And this is really the story of the wealth gap in the United States and a lot of the vitriol, anger, stress, and divide that, at least as an American, I can speak to that a lot of us are experiencing. What happens is when we're debasing the dollar, that causes inflation, and particularly in assets, and particularly in scarce, desirable assets, meaning the real estate on the water, the real estate on the beach, the top floor of the building in Manhattan goes up more than the abundant real estate that no one really cares that much about, that doesn't have that much of a scarcity value. You can maybe create a bunch more homes in the Chicagoland area, but you can't create a bunch more homes on the water because there's a scarcity element to that land, right? Same thing with gold, same thing with Bitcoin. And so what we've seen is Wall Street, or just, how would you say asset holders, the folks that actually own scarce desirable goods, they're getting incredibly wealthy as time goes on. People misunderstand that having interest rates or having, Fed set rates at 4.5%, that's actually very stimulative because the United States is paying such a high bill on its interest costs, and though that money is going back into the economy. So people that own a ton of T-bills, a ton of short duration US debt, they're getting paid out a ton of money, and they're going yachting, and they're buying real estate, and they're traveling, and they're buying Bitcoin, and they're buying gold. Now, the other side of the world, or the other side of this coin, these people are struggling because if you're living paycheck to paycheck and you don't own a home yet, you don't own one Bitcoin yet, you don't own a good gold position yet, you don't own these scarce, desirable assets that you're either consuming in homes or a car, or you're saving in Bitcoin and gold. These things are inflating away from you, so they're getting harder and harder to acquire as this story plays on. And so the people that don't own these things are getting poorer every single day in purchasing power terms, in their ability to acquire these things. And the people that do own these things are getting exponentially wealthier and not necessarily doing a lot of work per se. right? And so this, in my opinion, causes the divide, the anger, the tension in society. The ability for someone to work so hard, sacrifice and do everything right, and still have a life that they don't feel is worth living. And what we're seeing is there's two economies here. The Wall Street economy, the Larry Finks of the world, they're killing it. Breaking records with their ETF. They own a lot of Bitcoin. They own a lot of assets. Their CAGR on every single portfolio is through the roof. They own a lot of T-bills. They're getting paid 4.5%, 5% to sit in this short US debt. This is financing their mortgage, their private planes, their yachts. But the Sherwin-Williams customer, the do-it-yourself, paint-your-house customer, the new home buyer customer, what Sherwin-Williams is saying is we're all getting destroyed. Our business is down tremendously, sales are down, and that's because middle to lower America is getting crushed, And the only time Sherwin-Williams did this is 2009 and 2020. 2009 and 2020. So it's an interesting idea. Are we in a recession? No, we're not in a recession technically, but it depends who you're talking about. We shouldn't look at America as this one big economy anymore. There's two economies, okay? So this from the Wall Street Journal. The middle class vibe has shifted from secure to squeezed. After months of tracking high-income earners' positive economic outlook, America's middle-income households appear to be losing confidence.
There are two economies now, and only one of them is winning. While asset holders grow wealthier through rising values in Bitcoin, gold, real estate, and T-bills, the average worker watches those same assets drift further out of reach. Inflation isn't just raising prices, it's dividing people. The rich are getting paid to wait. Everyone else is getting priced out of ownership. According to Mallers, this isn't a shared economy anymore. It's a slow-motion separation, and the middle class is quietly being erased.
And I've said many times before, fiat, this fiat regime, this fiat era has decimated the middle class in the United States of America. What do I mean by that? It's really simple. You either own assets and are protected and are benefiting from debasement and destruction of the currency, or you don't. And that's it. In a prosperous society, there is a middle class. Let me explain it to you guys this way. If the third floor is the top floor, the penthouse floor, the Larry Fink floor, the Wall Street floor, the elite floor, and the first floor is non-asset holders, paycheck to paycheck, no matter how hard you work, if housing is inflating at 20% a year, you have to be getting a 21% raise every single year to just be making marginal progress towards owning a home. And there is no second floor. So you have the top floor and the third floor. The first floor is the bottom floor. If there's no second floor, the third floor people can't get to the first floor. Elite asset holders can't become poor. All they do is sit on their assets. They're not doing any proof of work for society. They're not doing all. And they're getting rich. And the first floor people can't get to the third floor. They're working as hard as they can. They're getting degrees. They're working 2 jobs. They're sacrificing parenting their children so that both parents have income. They're saving in high yield savings accounts. They're not getting close to getting to the third floor, no matter what. That's a very destructive society. That's a pain society. That's 2 different economies. Larry Fink loves getting the yield he's getting on T-bills and watching Bitcoin go from 20,000 to 115,000. He's swimming in it. Now, Bitcoin's unique because it's the only thing all of us can buy and benefit from. Not all of us can get fancy real estate that outperforms inflation. But all of us can get Bitcoin. That'd be my message to the first floor. But to bring it back to the point, a healthy society needs a second floor. Having no middle class is very destructive. And what ends up happening is the rich get richer and smaller. The third floor is not nearly as big as the first floor. The first floor houses like 70, 80% of the population. The first floor is the minority, the wealthy minority. And that's what we're seeing here. That's what we're seeing here. And it happens because when your job is to export the currency, be the world reserve currency, you don't have jobs for these people. The way to get rich in America is to be a financier. Wall Street, finance. trading, hedge funds. You're not actually making real shit. You're not actually providing tangible things to the people around you. All of the manufacturing jobs, they're in China. Apple doesn't want to make the iPhone in Manhattan. Rent in Manhattan's $5,000 a month. Apple's margins would be crushed. Stock would go to zero. The iPhone's made in whatever, Sichuan or some place in rural China. And so when your job is to export the currency, you're also exporting jobs. You're also exporting the middle class. And you're creating a division of you either own assets and you don't. And this was such a rigged game before Bitcoin. Before Bitcoin, none of us on the first floor could own anything that the third floor owned. Nothing. Now we get Bitcoin. Bottoms up movement. Bottoms up movement. So some of the charts that were referenced, here's US consumer sentiment across the income levels. So income over 100 grand a year, it's great. Income 50 to 100 grand, not great. Income under 50 grand, even worse. And so you guys can start to see the division and the trends here. If you're making enough money, if you can afford things on the third floor, you're fine. What I would want to add to this, obviously the data doesn't exist, is Bitcoiner sentiment. Because it doesn't matter how much money you're making, whether you're making under 50 grand, 50 to 100 grand, over 100 grand. If you found Bitcoin, you understand Bitcoin, you've lowered your time preference, you earn more money than you spend, which allows you to save. You produce more value for the world than you consume, which allows you to save, and you save it in Bitcoin and you've lowered your time preference. I would say sentiment is through the roof. You're getting 50 to 60% CAGR every year for the last 10 years. And that's the escape. Bitcoin is that exit door, guys. It is that exit door.
The US government isn't making financial mistakes. It's following a script. Massive deficits, runaway spending, and currency debasement aren't glitches. They're policy. Inflation is the strategy, not the consequence. Asset holders benefit while savers get crushed. The middle class? Gone. If you don't hold real assets like Bitcoin, you're sliding backward. The real default is slow and silent, hidden in prices and purchasing power. The exit isn't in Washington. It's digital, decentralized, and available to anyone paying attention. That exit is Bitcoin. Let's watch more clips from his interview.
Now, in the month of August, the US government collected $344 billion. Just one problem. $344 billion, that's great, right? If you annualize that out, that's a ton of money, killing it. They spent almost $700 billion. So our deficit in August was $345 billion. If you annualize that out, our deficit would be over $3 trillion, almost $4 trillion a year. Guys, this is policy. Again, people look at this and say, this is a mistake, this is a crisis, this is Putin's fault, this is the war's fault, this is China's fault. No, I need to tell you, this is policy. This is policy decisions. They are purposefully making these decisions. They're going to try and grow their way out. They're going to run it hot. They're going to let inflation run. Real rates negative. Debase, debase, debase. Bitcoin is going to win. It's the exit door. It's all of our ways out. The middle of America, that yellow, that orange, that red that's living in a recession, that middle to lower class. There's no longer a middle class. If you don't have the right assets, you're the lower class. It doesn't matter anymore. You have to get yourself some Bitcoin. It's the only ticket out that is sold to all of us. Great, Larry Fink adopted Bitcoin later than me, and he found his way out. I wasn't given the opportunities Larry Fink was given. Bitcoin is the only ticket available for sale to everybody to get out. If you're listening to this podcast and you're a top financier on Wall Street, good for you. Good for you. You don't have to listen to the rest of the episode. You got it, bro. You figured it out. Good for you. If you're not, your way out is Bitcoin. This is policy. These are purposeful decisions. I'll put it to you another way. Their only way out is Bitcoin. Gold and Bitcoin are absorbing all the liquidity and constantly making new all-time highs and performing the best because they have to. The dollar has to go down. Something else has to go up. So their only way out is Bitcoin. Now, they don't think about it that way. They think about it as their only way down is debasing the dollar, debasing the debt, and effectively defaulting through inflation, a soft, long default. But the sooner you find the exit door, the better you'll be. There's now $7.5 trillion in money market funds. And this is just the level of liquidity that Bitcoin is going to see soon. When rates start to come down, this capital needs to find a new home, needs to find returns. The amount of money that is going to flow into assets that needs to find a... Bonds are getting destroyed. Real rates are negative and will continue to be. We haven't even started cutting rates yet. The amount of capital will be immense. This is Bitcoin over TLT, over treasuries. I mean, guys, like, and look, here's the thing. You look at these charts. I've been in Bitcoin since 2013. I watched Bitcoin go from $50 to $1,300. And then Mt. Gox gets hacked, Silk Road got busted, all this shit happened back then. And then it went all the way down to 200. And the chart looked insane. Like the hockey stick up and the fall down looked crazy. Now, it went from 50 to 1,300 to 250. Then it went to 20,000. I was like, oh my God, I thought $1,300 was a lot for a Bitcoin. Holy crap. And then it went from 20,000 to 2,000 or whatever, 3,000. You see these little blips down here? Every single bigger run ends up looking like a little blip. And you can see since 2020, I mean, Bitcoin's been ripping the face off of TLT. Since everything broke in 2020. Now this is gold over TLT. Look at this, relatively stable until 2020. My goodness. And this is the stock market. Now gold and the stock market look the same over TLT. Everything broke in 2020. In 2020, a lot of shit broke. Now Bitcoin is just a beast of its own. It's the pin that popped the balloon. But, I mean, here from Reuters, Ray Dalio last week, gold is a shield for U.S. market risk. He suggests 10 to 15% of your portfolio should be in gold. Now, I don't own any gold because I own the better version of gold. I own Bitcoin, okay? My recommendation is own whatever allows you to be comfortable, sleep at night, and build the life you want to live. As much Bitcoin as that is. 10, 15%, sure. Listen, I don't know anybody that understands Bitcoin and it's 1% of their portfolio, 5%, 10%, 15%. If you get it, if you listen to this show, if you're one of me, one of us, I mean, guys, Bitcoin's 100% of mine. But you have to be comfortable. You'll get there. It's a journey. It wasn't always 100% for me. Let's play this video from Elon.
You're in Palo Alto and not Washington, D.C.
I'm at Tesla Global Engineering Headquarters in Palo Alto.
Yeah. So no more Washington, D.C. You're back at work. You're focused. Yeah?
I haven't been to D.C. since May.
Okay.
That was a hell of a side quest.
That was a good side. Any lessons from your time in Washington, D.C.?
The government is basically unfixable.
Elon, only.
I applaud David's noble efforts in this. It's good to have talented people in the administration, but at the end of the day, if you look at our national debt, which is insanely high, the interest payments exceed the Defense Department, War Department budget. And they keep rising. So if AI and robots don't solve our national debt, we're toast.
So Elon thought he was going to doge the place up, and he realized he called it unfixable. This is policy, guys. This is it. This is it. The only way out is through debasement. They have to weaken the dollar. They have to debase the debt. They have to default through inflation, through currency debasement. That's their soft default. You heard it right there. What'd you learn from Washington, D.C., working with the president, trying to solve this problem? It's an unsolvable problem. Bitcoin isn't a fix. It's an alternative, right? Bitcoin's not a hedge, it's the replacement. We got to move on to a new system.
Meanwhile, Bitcoin's march toward $120,000 is gaining steam, powered by structural factors deeper than just spot price action. Net exchange withdrawals in September trimmed sell-side liquidity, while $2.2 billion in spot ETF inflows created persistent daily demand far exceeding new BTC mined. These signals echo what Jack Mallers has stressed repeatedly. This is not a market reacting to hype, it's absorbing policy. The Fed may delay or disguise rate cuts, but the underlying game remains the same: debase the currency, inflate the debt away, and let real assets rise. Mallers frames this not as a crisis, but as design. The current fiscal path is intentional, and Bitcoin is uniquely positioned to benefit. With real yields turning negative and treasury markets flashing stress, institutional capital is hunting for alternatives. ETFs, reserve strategies, and retail flows are all converging on Bitcoin. Whether the Fed acts or stalls this week, the stage is already set. Liquidity is coming, and Bitcoin is ready to receive it. What remains is no longer a question of if, but of how fast the system reprices. And when it does, Bitcoin won't just move, it will redefine the cycle itself. As we wrap up, do you believe the economic divide in America is still fixable, or is Bitcoin truly the only exit left? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to subscribe.